So, Tim, one of the things that Hoff and Leigh has really doubled down on since the financial crisis is my understanding is owning and operating commercial real estate. Can you talk a little bit about your investment philosophy in this regard, as well as what you perceive to be your competitive advantage when doing so?
Sure. Well, we've been successful investors because we watch the business cycles and we watch real estate cycles, and we buy when the party's over and the chandeliers crashing to the floor and all the dancers are running for the exits. And the implication is that you have to have a great amount of courage, and you do, because we buy when everybody else is selling, and that's not an easy thing to do. And I can remember after the last crash, we had a lot of heartfelt conversations around the kitchen table trying to figure out if the market was ever going to recover. And markets always recover; they always have. But the last crash was so bad, we were pretty fearful. But we stepped to the plate and we made a lot of good acquisitions, and that's proved to be a pretty successful strategy. And really, what we do, I would say, is counterintuitive. We really don't chase markets. We do a little bit of market timing. We really watch what's going on in the larger business world and just in the world in general, and try to buy when we see there may be some opportunity. Philosophically, it's kind of my belief that most transactions occur because of greed and fear, and because that's the case, most folks make bad investment decisions. And my experience has been that most folks invest really because of the adrenaline rush that comes from investing, and they continuously chase the last best horse. And what we do is different. We look for boring investments that pay us money every month. One of our really strong competitive advantages is that we're brokers and are on the ground floor, and because we get a first look at good deals. And the implication for the average investor who might be listening to this podcast is they need to find a trusted broker who has successfully invested for their own account. And by the way, that's not just a broker, but that's somebody who has successfully invested for their own account, so that the listener knows that person has a good experience. And they either need to partner with him or her, or develop a relationship where the broker knows the investor's needs and abilities, and then the investor has to be ready for the day when the broker calls and says, "Hey, send me your money." Because the fact is that good deals are picked up quickly, and then therefore that trust relationship and the availability of the investor's liquidity allows the average investor to play at what I would consider to be the A level and be able to take advantage of markets that normally wouldn't be available to them. And part of our national franchise model was designed around the idea that all real estate is so local, and because it is, and because we wanted to have a diverse market opportunity across the country, we figured out that having brokerages in all these markets put us on the ground floor with those folks that are in those markets. And so it's not unusual for us to get a call from one of our network offices and say, "Hey, you guys need to fly out and take a look at this deal, Salt Lake or Akron or Jacksonville or something like that." And if we didn't have a network, we would never get a chance to even look at those deals.